Okay, so let's talk about India's economy, because something pretty incredible just happened. We're talking about a growth surge that has left economists absolutely scrambling for answers. So today, we're going to dig in and explain what's really behind the numbers. This right here is the number at the heart of the whole story, 8.2%. That's India's real GDP growth, and it's a figure so high that almost no one saw it coming. I mean, it didn't just beat expectations, it completely blew them out of the water. And to give you some context for that, most experts, the big analysts, were predicting something around 7.3%. Even India's own central bank was aiming for about 7%. So hitting 8.2% isn't just a win. It's a huge sign that something fundamental might be shifting in the Indian economy.
And get this, it wasn't just a random one-off surprise. This is actually the fourth quarter in a row where growth has picked up speed, hitting its highest point in a year and a half. When you see a clear trend like this, it raises the big question: what in the world is fueling this incredible momentum?
To figure that out, we first have to understand the different pieces of this unexpected boom. So we're going to look at what's being made, who's doing the spending, and then a couple of surprising twists that are kind of hidden in the data.
All right, first up, let's look at the production side. You can think of it like we're lifting the roof off the nation's factories and offices to see which engines were running the absolute hottest.
And what you find is that this wasn't just one sector carrying the entire economy on its back. No, the growth was incredibly broad. Almost every part of the economy was firing on all cylinders. Construction, utilities, agriculture, they all posted really solid gains. But two sectors in particular were the absolute superstars of the show.
First up is manufacturing. Man, it just roared back to life with 9.1% growth. That's its fastest pace in 6 quarters. And this is a huge deal because it signals a real recovery in factory output, healthier order books for companies, and basically a revival in the industrial heart of the economy.
And the other superhero in this story? The services sector. It edged out manufacturing just slightly, coming in at 9.2% growth. Now, this is the largest part of India's economy, and it was driven by some blistering expansion in areas like financial services and real estate, which grew by over 10%. Just amazing.
Okay, so we know what was made. Now, let's flip the coin over and look at the other side. Who was buying all of it?
And the answer here is crystal clear. The single biggest driver was private consumption. We're talking about you and me, everyday households, who cranked up spending by a massive 7.9%. This wasn't a boom fueled by the government or by exports. This was powered by the Indian consumer.
So why did people suddenly feel so confident to open up their wallets? Well, it was like the perfect storm, but in a good way. Retail inflation hit a record low, which means your money just goes further. The government had cut some taxes on certain goods, making things cheaper. And on top of that, you had really strong demand coming from rural areas, plus all that festive season spending, which just created this huge surge in consumption. But, like any really interesting story, this one has a few plot twists. The headline number is fantastic for sure, but when you start digging a little deeper, a much more complex and fascinating picture starts to emerge. So remember that chart on spending? There is a really strange detail kind of hiding in plain sight. Government consumption. That's what the government itself spends day to day. It actually shrank. It went down by 2.7%, right in the middle of a boom. How is that even possible?
And here is the twist. That's actually a very good sign. It shows that the economy isn't just being propped up by government spending. The growth is becoming self-sustaining, powered by the private sector and by consumers. And that's a much healthier, much more durable kind of expansion. All right, now for the second little complexity. We have to quickly talk about the difference between real and nominal growth. Don't worry, it's simpler than it sounds. Just think of it this way. Real growth is about the increase in the quantity of stuff you make. Nominal growth is the increase in the value of that stuff, which also includes price changes, inflation. Now here's where it gets really interesting. So India's real growth was 8.2%. Its nominal growth was 8.7%. The gap between them is just half a percentage point. And while that might sound super small, it's an unusually, almost historically, narrow gap.
So why does this matter?
Well, governments collect taxes based on nominal growth. That's the total cash value of everything. When that number is low, even if real growth is high, tax revenues can fall short. This tiny little gap actually creates a massive fiscal headache, making it way harder for the government to meet its budget targets, even with the real economy booming.
So, given this incredible performance and its kind of hidden complexities, what happens next? Let's zoom out and look at the bigger picture.
Well, the immediate effect is a huge boost in confidence. Right after these numbers came out, India's chief economic advisor officially upgraded the forecast for the whole year. He's now expecting growth to be at least 7%, and he also confirmed that India will cross the $4 trillion GDP mark this year.
And this performance really solidifies India's position on the world stage. Major agencies like Moody's are now projecting that India will be the fastest-growing major economy in the G20, comfortably outpacing everyone else during a time of, let's be honest, global uncertainty.
But it's not all smooth sailing from here. There are some serious risks on the horizon to watch out for. The threat of escalating U.S. tariffs is always looming, private investment still hasn't fully bounced back, and most economists do expect growth to naturally cool off a bit in the second half of the year as some of these unique positive factors start to fade.
Which leaves us with the ultimate question, doesn't it? Was this incredible quarter a sign of a new, higher potential reality for the Indian economy, one that's capable of weathering global storms? Or was it just the result of a perfect but maybe temporary alignment of positive conditions? The answer to that is going to define India's economic story for years to come.